every good story has villains. Batman has the Joker, Harry Potter has Voldemort, and money? Oh, money has hedge funds and private equity firms. Now, let's get this straight. Hedge funds aren't really hedges. There are no bushes, no fences, just billionaires with spreadsheets betting on anything that moves. A hedge fund's entire job is simple. Take rich people's money, make risky bets, and then charge insane fees no matter what happens. If they win, they get richer. If they lose, they still get richer. And if it all goes down in flames, don't worry, they'll just say, the market was irrational. Hedge funds invest in everything. Stocks, bonds, currencies, oil, crypto, your grandma's fruit stand, you name it. If there's money to be made, they're in. And they love using leverage, which is just finance speak for let's borrow a ton of money and hope it doesn't explode. Spoiler, sometimes it explodes. See, 2008 financial crisis. Thank you, hedge funds. Very cool. But wait, if hedge funds are the gamblers, then private equity is the mob boss. Private equity firms have a very special business model. Step 1, buy a company using mostly borrowed money. Step 2, load that company with debt until it's begging for mercy. Step 3, cut jobs, sell assets, raise prices, slap on some efficiency improvements. Step 4, flip it a few years later and walk away with billions. It's basically house flipping corporate edition. Except instead of painting walls and fixing the sink, they're cutting pensions and selling the office chairs. And yet, they call it value creation, which is a very polite way of saying, we sucked the juice out of this orange and left you the peel. Of course, hedge funds and private equity firms aren't all evil. Sometimes they do save struggling companies. Sometimes they actually create growth. And sometimes they just buy your favorite restaurant chain and replace the breadsticks with cardboard. But here's the real kicker. These guys don't play by the same rules as you. They have inside connections. They have armies of analysts. They have lawyers who can find loopholes inside of loopholes. And they have enough money to move entire markets with a single trade. Meanwhile, you're over here refreshing your Robinhood app, hoping your $50 in Tesla goes green. And let's talk about their leaders for a second. Hedge fund managers are basically James Bond villains. They live in penthouses, collect art, own yachts the size of small countries. And they give interviews where they say things like, we're simply providing liquidity to the market translation. We're rich, you're not. Cry more private equity bosses? Same story. They call themselves partners, but the only thing they're partnering with is your retirement money. Yes, because a huge chunk of pension funds is invested in private equity. So congratulations. If you have a 401k, you're already financing the villains. Now here's the plot twist. For all their power, hedge funds and private equity firms don't always win. Sometimes they make legendary mistakes. They short a stock, Reddit finds out, and suddenly GameStop goes to the moon while a hedge fund loses billions. Oops. But don't feel too bad for them, because at the end of the day, they still collect fees. Always. Even when they lose. So let's call it what it is. Hedge funds and private equity are the sharks of the financial ocean. Powerful, ruthless, and kind of impressive in a scary way. Do they add value to the economy? Maybe, sometimes. Do they make themselves insanely rich no matter what? Always. And that, ladies and gentlemen, is why they'll forever be the perfect villains in the story of money.